This is part of my don't fuck this up thesis. If you want to get involved, like, it's life-changing. It's the biggest macro trend we've ever been given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%. And 18 months later, it's back at all-time highs.
On March 5th, 2024, Bitcoin set an all-time high of 69,200 USD. This movement was followed by a sharp drop-off and outrageous liquidations. About $1.5 billion in long positions were liquidated in a 30-minute period. In a podcast episode, Raoul, renowned macro analyst and billionaire, briefly dives into what exactly triggered those liquidations. From there, he segues into the two major factors that can jeopardize your chances to make the most money during this cycle. He starts off by breaking down the psychology you should have as we enter the bull market. He then turns his attention to explaining how you should treat your financial allocation to cryptocurrency to maximize profits. After discussing all this, and even giving some insight into how high this cycle might take us, he ends by discussing the two things you should definitely not do. Let's dive right in.
So you've got to think of crypto as the most ludicrous market you've ever been involved in. It has the highest returns, the highest volatility, the biggest drawdowns, the best memes, the most stupidity, the most angry people who hate you because you're involved. It's like everything in the world turned up to 11. So it's the most befitting thing in the world where everyone gets super excited about new all-time high in Bitcoin. It prints the new all-time high, does a massive reversal, and everyone's like, oh, we're poor again now, And it's kind of like the other thing about crypto, unlike traditional markets, it's so easy for regular people to have leverage. So for some reason, even though you warn people and tell people and beg people not to take leverage in a 70 vol asset, they still do it. And so what happens is, it might even be just a small position, but it builds up because they all get confidence. Then something happens and it's like, you get liquidated, you all get liquidated. We cleared out, I don't know, it was $1.5 billion of liquidations in Bitcoin in like half an hour. Market resets and off we go again. So it's kind of, you have to think of it as a computer game. It's so ridiculous. But as you know, I don't trade any of this stuff. The idea is just to own your spot, own it for the cycle, and just do nothing. And it's really as simple as that. You get paid to do nothing. I mean, most of this stuff, Solana was up 10x last year, Bitcoin was up 160%, everything's up 50% this year to date. You don't have to do anything. You don't have to do anything at all. Here and other stuff a little bit later to explain the kind of mindset you have in a bull market. It's very different, and it's very difficult when assets move this fast because you always feel like, oh my God, I'm buying the top. It's going to be terrible. It's scary. But how you got to think about it is we're getting to price discovery phase in Bitcoin, and most of the other crypto will catch up and we'll all get to new all-time highs in the quality assets. The shitty stuff won't do. But the quality assets go to all-time highs. You don't know how high they go. Usually it's somewhere between 3 and 10 times the previous all-time high. Okay, so even when you're at the all-time high, you've got significant upside from here. If we're not at the business cycle point where things turn lower, which tends to be later on, later in 2025, maybe if it comes earlier, it's the end of 2024. Either way, that's when you get larger drawdowns. So you're going to see 35% liquidations, but you've probably got a worst case 100% rally from here, and the best case whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people you hold less of an asset that's so volatile, so you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low for the next week? I don't know. But if it does, you should think of it as a gift. You should not be scared of them. If you have a thesis and you understand and you think, okay, this market's going to go higher over time, then use sell-offs to your advantage to get slightly better entries where, it's less frothy, because it never feels good to buy something and then it goes in your face 10, 15, 20% before rallying. It's always that always leaves a bad taste in your mouth. It's always nice if you can buy something that's on sale for no real reason except people are liquidating positions because they got overexcited. That's a nice time to start adding to it.
So far, Raoul has discussed the mindset with which investors should approach crypto, especially in a bull market like this. He explained that it's critical that you understand that crypto is a once-in-a-lifetime, up-only opportunity that pays you to do nothing. He particularly warns against the temptation to use leverage. He expands on this notion and touches on the other thing that will halt your pursuit for financial freedom, should you allow it. Let's head back in to hear all of it.
This is part of my don't fuck this up thesis. If you want to get involved, like, it's life-changing. It's the biggest macro trend we've ever been given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%, and 18 months later it's back at all-time highs, making everybody look like idiots. So the game is not to fuck that up. And the classic way of doing it is using leverage, because you will lose your mind. You will do stupid things like, here is an asset class that goes up stupid amounts. And for some reason, that little voice in your head says, you know what? If I just got 5 or 10 times levered, I could make 10 times as much money. What, are you bananas? It goes up 100, 200, 300% in a year. You don't need leverage. And so just stop doing that and stop FOMOing. Because, you know, today was a classic FOMO day, right? Most people were like, it's broken all-time highs. And don't do that in crypto. It will make you look stupid. And just have a plan, stick with it. Don't use leverage. Use the right time horizon. Unless you know how to trade really well, like Tony, don't touch it in that time horizon. Just buy and hold it and forget about it.
Remain calm and do not f this up. That's the simplicity of Raoul Pal's message today. On March 13th, Bitcoin climbed as high as $73,000 per Bitcoin. Today, only a few days later, it's sitting at $63,000. In this interview, Raoul warned that this undulation or cycle of flash rises and brutal corrections is to be expected as we head into the thick of the bull market. Bitcoin's behavior is further confirmation of Raoul's thesis and establishes that the only thing you need to do is to wait and hold. Raoul has also shared advice for you if you feel underexposed. On days like today, after a correction, Raoul suggests you average more into cryptocurrency. He also predicted that based on historical evidence, he expects this bull cycle to take us 3 to 10x higher than the previous cycle. In essence, Raoul is saying Bitcoin could reach as high as 700,000 USD per Bitcoin. Raoul believes that based on your risk appetite, it's a sound investment policy to continue to allocate more and more into crypto, regardless of price. He advises that you don't try to buy the bottom, and instead remain content with averaging in slowly. There's more than enough to be made, if and only if you don't f this up by doing something. What do you think of Raoul's bullish predictions? To see the latest in crypto news, watch this video here.